Born and raised in Birmingham, Alabama, with what you would call less than humble beginnings, Reginald Stinson always knew that he had the ability to shape his direction and destiny for life. While in college, he was exposed to and took the first step in the direction of entrepreneurship within the network marketing industry. In 2006, he experienced his first breakthrough and was able to fire his boss after 4 months. 4 years later, he had his first six-figure year. Reginald has become the hope giver, compassionately training his success line of over 14,000 people, personally producing over 8 six-figure earners. Today, Reginald has become a master marketer, top affiliate, and leader to his large following online, impacting thousands of people around the world with his training and leadership. Reginald's mission is to inspire and teach people that regardless of where they come from, they can shape their own future without any limitations, just as he did for himself and his family.
Hello, this is Dr. Reginald Stinson, and in this video I'm going to be talking about the head and shoulders pattern. Now, really quickly, this is a traditional head and shoulders pattern. It can be showed this way. It can be an inverted head and shoulder pattern, which would pretty much be this way upside down. It can be sideways, etc. But we're going to talk about this, and I'm going to talk to you about exactly how this works. Okay, now this is a popular Forex pattern because it is a reversal pattern. Typically, this is, let me see what time frame I'm on. I believe this is the 4-hour time frame here, and it typically will show up when there's a strong move in any direction. You'll have a head and shoulders pattern form. Now here, this is shoulder number 1. This is the head, obviously. This is shoulder number 2. Okay. Now be mindful that when you're looking for a head and shoulder pattern, it's not always going to show up perfectly. Okay, it's not going to be the perfect aligned pattern all the time, but it's just something that shows up very frequently in the market. Now, one thing to be mindful of is a head and shoulder pattern is not validated until you have a break of the neckline. Okay, so let's talk about that. All right, so you have let me get rid of this brush thing here. All right, so you have a push from this bottom up to this top. I'm sorry, here. This is roughly 217 pips. Okay. And then you have it come down and it forms support. All right, then you have it push up again to form the head, come back down, form support there. Okay, so what I'm gonna do is I'm gonna take this horizontal line and I'm simply gonna consider this. Actually, I'm not gonna use that. Let's use this trend line. We can just call it the neckline, okay? Because that's where support was found, and you notice that price was bouncing up and off. Now, remember that when you're looking at a head and shoulders pattern, the pattern is not validated until there's a break of the neckline. Now, this is where a lot of traders make mistakes because they see the pattern forming and they may say, hey, there's a head and shoulders pattern, okay? But they don't take into consideration that a few things could happen here, okay? It could actually come here, okay? Go to this neckline, all right? And then, and I apologize, this is not perfect. I'm not used to doing this on my laptop. But it can come here and it could bounce off of this and go straight up, okay? So it can come to that neckline and go up. And if that was to happen, which you have to understand that in Forex, no pattern is 100%, okay? No pattern is going to win 100% of the time. So you want to be sure and wait for confirmation before you actually jump into this trade. So what could have happened is price could have actually came down to the neckline, bounced off, and shot up, and that would have invalidated this pattern. Okay, it would have never been a valid pattern if that would have happened. Okay, but in this case, you see that didn't happen. So I'm going to remove this off the chart. Okay, and as soon as price breaks below the neckline, okay, that is a valid head and shoulders pattern. That is the only way you can consider it a valid head and shoulder pattern, and that's the only reason you should trade it. Okay, and once that break happened, you notice that price dropped a very, very long way. Okay, so we're gonna take it from here all the way down here, and you're looking at a 396 pip drop. Okay, from the close of the candle once it broke the neckline. All right, so some of you guys may be wondering, okay, so how can I set my take profit levels? There's really a couple things you can do. Now, first of all, you want to use price action levels to determine your take profit, whether that be field extensions, whether it be support and resistance, etc. Okay, but what I like to do is, especially when I have a pattern like this, is I like to do what is called a measured move. Okay, and a measured move is basically going to be the head all the way down to the neckline. Okay, so I'm going to measure from the head all the way to the neckline, which is roughly here, and that is 190 pips. Okay, all right, so let's kind of recap what we're doing here for those that may have got lost. Okay, so I'm going to measure from the head down to the neckline here. All right, and in this case, from the head, it's roughly right here. That didn't do right. Hold on. I believe it was 196 pips before. All right, for some reason. All right, give or take, it was 196 pips. For some reason, I can't get TradingView to work right. Here, but it was 196 pips. Okay, so what you would do to measure the move is you would measure from the candle break of the neckline, which would be roughly right here. And again, it's not doing right. What is going on here? Okay, so I measured down 196 pips, which again, you see that this measured thing is not working properly. Okay, but that would roughly be somewhere up in here. But actually, what I'm going to do is I'm going to take the trend line and take it down here. All right. Let's make that red, and I'm going to make it thick. Actually, let's make it purple. Okay. So that's your measured move. Okay. So once I get that, this is actually probably easier on TradingView. I will take it from the neckline break down to there. Okay. And that will be my first take profit level. So I can actually take this like this and put that right there. And that's going to be my first take profit level. Now you see price actually kept dropping below that, but that's typically how you would do a measure move. Okay, you're going to measure, again, the top of the head all the way down to the neckline. Okay, which this line is not perfectly, and for some reason, again, like I said, TradingView is not working properly on my laptop, so I apologize for that. But you will take it all the way down to where the neckline is, where a candle found support, and that's where you would measure. So you can either measure with the ruler, or you can simply measure with a line. Okay, take a line from here, take it all the way down here, and then you're gonna come over from where the candle broke at, and you're gonna measure from the neckline down to wherever that line goes. So you can just take that line and move it there, and that will be your first take profit. Okay, now this doesn't work all the time. Okay, so you want to make sure that you use proper risk management and properly manage the trade. But for the most part, this is pretty accurate. Okay, and it works pretty well. And as you can see, price shot through that and actually kept going. Okay, so that concludes the video. Hopefully you gained some knowledge from this. All right, and we'll see you on the next video. Take care.